All right, people, hold on. Well, there we go. All right. Let me just get this started here. Welcome to my stream. Okay, cool. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis stream. In this stream today, we're going to go over this Bitcoin situation because, boy, is it tricky. I also want to address some of the outcomes that we have in the trade scanner results channel. All right. We recently set up, again, you could thank Steen for all this. We set up a results channel on the server, on the Discord server, and anyone can see this. All right. So you can see the results of the closed trades. We're going to talk about that because I have to address something there. And then, of course, I'm going to go over, we're going to go over some of these outcomes here, right? Like the title says. All right. So enough talk. Let's just get right into this. Hold on. Let me just put this up here. Okay. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Let me just say a quick hello. We got Shashank. Hey, it's good to see you. You say the thumbnail change is working. I don't know. I'm not sure what you're referring to, Shashank, because I don't see much of a change. In fact, my numbers seem to be going lower. I don't know. Maybe it's just me. Okay. So, well, yeah, but thank you for the suggestion. All right. Okay. Hey, Armin. Hey, y'all. Armin, I was wondering, where is that something you got from a particular podcast? Because that's funny. Anyway, Howard, good to see you from Ireland. All right. Top of the morning to you. Or they say something like that. I can't really do an Irish accent. Hey, Steen. All right. By the way, speaking of Steen, if you guys want to help out, there's some links in the description where Steen has some affiliate links. If you're looking for an exchange or whatever, a platform, consider those links because he gets a small fee if you sign up through that affiliate link, but it helps out the community immensely. Okay, because the work that he's doing is really nothing less than amazing. So all these new updates, all this trade scanner stuff that you're seeing is the result of his hard work. Okay, so anyway, just wanted to mention that. Hey, James, good to see you. Okay, cool, no problem. We're from London. Oh dear, James from London. I have to be careful with London. There are a lot of billionaires over there. James may be a billionaire, and I don't want to offend you. Okay, Djen, hey, good to see you. Okay, from Slovenia. Slovenia. Yes, I know Slovenia. Okay, cool. We have one of my team guys is from Slovenia. All right, cool. So anyway, let's get into this. First thing we want to talk about, as you guys know, is the economic calendar. It's something that I go over every Monday, and you guys should go over that too. I see Steen beat me to it. Oh, you know, I forgot to put up TradingView. Hold on a second, guys. I completely forgot TradingView. I knew I forgot something. So I'm streaming over there. I just have to pull up I just have to pull it up here. Hold on, just give me a second while I pull that up. Sorry about that. Forgot. I knew I forgot something. Hold on. Just give me a second here. All right. And then I have to put in this. Okay. TradingView, people. There we go. All right. So if you're watching me on TradingView, make sure if you can't see me, make sure you refresh the browser because that usually solves the problem there. Okay. So I should be doing this for about 30 minutes, 35 minutes, something like that. And by the way, people, so if you're going to ask questions, students only, okay, or members of my community only, I'm going to answer those questions in order to keep this timely. Also, do me a favor, press the boost button, press the like button, subscribe to my channel on YouTube, subscribe on TradingView or whatever, press the boost on TradingView because it helps me out. All right. I have a story that I have to share about some of the stuff that I've been seeing on there. All right. But before I get into that, let's first talk about the economic calendar. Okay. So I see Steen always anticipates. He beat me to it. And Steen mentions here the interest rates, right? So what do we have this week? We have, I'm just going to say it. We have on Wednesday, we have the FOMC meeting here in the US, right? That usually comes out at 2 o'clock, or the rate announcement comes out at 2 p.m. Eastern time, and it's followed by a press conference, okay? So that's a very important piece of information. No matter what you trade, you need to be aware of that, okay? Then we have on Thursday, what do we have? We have Bank of England, all right? They have their rate announcement. We have the Swiss National Bank. They have their rate announcement. And we have Bank of Japan. Hey, Kai. We have Bank of Japan. These are all rate announcements this week. So that's pretty heavy on the economic front. And if there are any surprises or anything, rate hikes or things that aren't expected, markets can move, right? So what's tricky about this is going into those announcements. It's a lot harder to take swing trades or take or investment type trades because things can change so dramatically. When you're going into news reports like that, really, especially if you're a beginner, you should only day trade or just stay out. Stay out, let the news come out. And the reason why I mentioned day trade is because you can adjust. If there's some kind of surprise and there's a push in one way or another, you can get involved in that and minimize your risk. What people don't realize as swing traders, or actually more as investors, is if you're an investor and you're in the market, the longer you're in the market, the more at mercy you are to the market in terms of risk. So the investors have the greatest risk. They don't like to believe that. They're in another world. Investors are clueless, okay? They like to buy something because they're lazy. They like to buy something and just hold on to it, right? And they think, oh, I'll be rich in a few years. That's what they like to think. Meanwhile, they're at the greatest risk. So if they just so happen to start investing near a bottom of a cycle, great. They're going to have the next few years are going to be great. They're going to be happy. They're going to be partying, right? But if they happen to invest in the middle or at the top, well, be prepared to donate your money. Okay, that's all I can say. And that's why it helps so much to be aware of certain things like economic cycles, the business cycle and stuff like that, especially as an investor. Okay, but anyway, hey, Han, from Netherlands. Okay, cool. Alex, good to see you. All right, I got all my members here. Cool, guys. Good to see you all. All right, so so that's the economic calendar. Please be aware of these things. And if you're considering a trade, just think twice, because you have to mitigate the risk for those type of trades, right? A lot of times these rate announcements tend to be non-events. So it comes out and then you can continue. What's tricky a lot of times though is volume may shrink going into the event and things can become very erratic and noisy. All right, so that's the first thing. Hey, Sean, that's the first thing I wanted to mention. All right, now, next thing here, let me pull up my TradingView people. Do I have anyone watching me on TradingView? My numbers stink over there. Okay, and now I was researching that a little bit, and I was looking around. So I want to share my quick story before we talk about Bitcoin here and what's going on here with Bitcoin. So I was looking at TradingView, and I was looking at a lot of the analysis and stuff that's on there, and the kind of stuff that people are sharing. Okay, and I came across one article. It was an educational article, and the article was something about how to have an advantage in the markets. It was something like that, right? And so I read the article, and while it was well written and it was definitely logical, Captain Obvious could have written this article. Okay, what I mean is it was conventional. The way to have an advantage in the markets based on this article was do things like keep a journal, have a trade plan, stay on top of news, make sure you're aware of all the news that's going on, like all this complete nonsense and misinformation. Now, and I tried to think of this from the beginner perspective. And I said, wow, imagine if I was a beginner and I came across this article, right? I would think that, oh, I'm onto something here. This sounds good. Nowhere in the article, nowhere was there anything about efficient markets and about how to actually make money in this game. Now, of course, all our goal here is to make money in this game, right? We're not here to just look at charts and charts just make us happy. We're trying to figure out how to make money from looking at charts, right? Or this kind of thing, right? That's our goal. Well, this article implied that you can achieve that goal by doing these things, right? Meanwhile, this is extreme misinformation, especially for the beginner. Because now imagine the beginner, what are you going to do? You're going to try to come up with a system. You're going to pay attention to all the news. Maybe you'll even buy a news feed. You're going to do all these things that basically lead to nothing, right? And that's the problem. That's what I mean. Like people think they're getting informed and they're being misinformed. Efficient markets is the first thing that everyone should teach you. It's the first thing that everyone should learn, but no one talks about it. All right. Efficient markets hypothesis is a theory that came up in the 1960s, and it was shrugged off for a long time. All right. And there are many good reasons why. But in recent times, recent decade, it's becoming more and more relevant. And I've given that a lot of thought. First of all, it's something I learned as a chartered market technician. Okay, it's one of the first things I learned. But when I learned it, it had not registered, right? It took me still a few years for it to sink in, to realize, that's what it means. Okay, efficient markets basically says markets are always they're always at fair value. There's no such thing as overbought and oversold. Okay, all the known information in the world is priced in right now, and that investors are rational, right? So those are some of the aspects of the efficient markets hypothesis. And then there's some weak and strong arguments and blah, blah, blah. I'm not going to get into that. But my point is this. Efficient markets basically says you can't beat an efficient market. And a lot of these things were shrugged off because, markets trend, right? History repeats itself. So, we can make money. And for a long time, people could make money on inefficiencies, right? Let's talk about inefficiencies for a moment, because most people, you may understand the word, but you don't know what it means. An inefficiency is basically a mispricing. It's where profit comes from. Now think about this for a moment. Before I get to the analysis, I know I'm ranting, but I have to say this because it's a very important point. Inefficiency. Now think about this for a minute. When you place a trade, at that point that you place that order, right, and you bet your money, you are 100% convinced that this is going to be a profitable trade. Otherwise, you would not place that trade, right? I mean, most likely you would not. Now, people fear of missing out, right? Fear of this, fear of that. And they place these trades because they believe that this is going to be a profitable trade. If they had believed the opposite, they would not take the trade. Now, here's my point. If they're taking these trades on misinformation, then that is a behavioral inefficiency because they're placing these trades on something that's complete nonsense. It's not relevant at all, but they're still stimulated. They still place these trades. That means there's money to be made on the other side of that, right? That's an inefficiency. And there are two types. There's what I like to think of physical inefficiencies, which is a realm we can't even compete with. So I'm not going to talk about that. That's like, how fast your order takes to get to the exchange. That's one type. And then there's behavioral. And the behavioral is where I believe the retail trader has a chance to exploit. And that is what I spend my time trying to figure out. Okay. Or that's what led me to build my trade robot. Okay. Which is the market scanner, which is the trade scanner. And I want to address that in a moment. I'm not going to talk about that yet, but we'll talk about that before I finish the stream. But the point is, if you don't have that inefficiency ironed out, if you don't know what you're trying to get at, then you're just wasting your time. Okay. And this is where most people go wrong. They don't understand that they cannot beat an efficient market through conventional means, right? So if you're using your typical RSI and you're using this moving average, this and that, and whatever, and you're using it in a conventional way, then chances are your outcome will be random. So you spend all this time learning and informing yourself and becoming an astute investor and all this blah, blah, blah. And I can achieve the same result by simply flipping a coin because markets are random. All right. So my point is, all this stuff that you consume, you have to be very careful about what you consume because 99% of it is irrelevant. And if you're taking trades on it and it happens to work, chances are it's random. All right. So I just wanted to mention that because, again, when it comes to the trade scanner attempts to isolate a particular behavioral inefficiency, right? I've identified, but it's far from perfect. Right? And I want to address that because there's no such thing as 100%. It's always going to be some type of probability, but we want to maximize that probability. We want to be right 80% of the time, right? Or 90% of the time. That's very hard to achieve with with behavioral inefficiencies, right? It's probably closer to 50%, hopefully 60% if we can get something like that. Also, it's going to change based on how the environment is. Anyway, we've been making some important updates, right, to the trade scanner to help filter out some of the noise. And for those of you that could see the channel with all those losing trades, I'm going to talk about that here in a moment because there's a very important lesson to be learned. All right. So that was my little efficient markets rant. If you have questions about that, do me a favor. If you're not sure or you come across some nonsense, don't take trades right away. Question it. Okay. And I'm going to show you here in this, what I'm going to show you here with Bitcoin as far as expectations and how to adjust to this new information. This is where the whole efficiency thing comes in. All right. So let's get into that here. So I want to talk about this Bitcoin, right? That's the purpose of this stream today. Let me just pull up this. So we had a move, right? We had this initial move recently, okay? Off of this was based on the SEC nonsense, right? This move right here, okay? This initial push, and I talked about that, and I said, okay, this is first of all, we knew, right? If you've been following me for some time, I've been talking about this area here. The 25K area is a relevant support area. It's a high probability location for bullish reversals. So right there, that's called context. So if you understand that this location is a high probability place for bullish trades and you're getting bearish trades, what does that say about the bearish trades? It says that they're low probability, right? So I mentioned this because my trade scanner called numerous bearish trades going into this support, and I warned people. I said, be careful with this because these can get stopped out very easily. They're aggressive trades. You're shorting into a support in a broader trend that's generally bullish. Now, when I talk about broader trend, I'm talking about all of this, okay? Most people, especially all the experts on TradingView, they only look at this. And they're like, hey, bearish trend and blah, 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 right? That's what they look at. But really, you need to consider all of this. This is really like the midterm trend, and that's a consolidation. So if you look at that and you say, well, we're back at this low over here, that tells you that's a piece of context. If this general trend is bullish, which it is, right? We have higher lows and we have a higher high, and we're testing a low, and that low does not break, that means strength is likely to return. So shorts are a bad idea. That's context. So if you know that, you say, okay, I have two choices. I see the trade scanner popping up all these short trades. Should I take them? No. Or if you want to be aggressive, you say, okay, I'll take one, but if it goes the wrong way, I'm getting out right away because the expectations on that trade are low to begin with. It doesn't mean that they won't work, but it means the probability is low. So avoid or go in with extreme caution. Like, okay, I'm going to be very careful with this thing. If it turns the wrong way, I'm out, right? That's how you have to treat that. It's more like a day trade because you're going against the location, the probability of the location. That type of judgment is context. And I'm trying to find a way to program that into the bot, but that's not easy to program into the bot. So if the bot was able to think exactly like I could, then it would not call so many losing trades in that regard because it would see the context and say, I'm not calling any trades here, all right? Or I'll only consider longs or wait for the long setups to come back, which is really how you should treat something like that, right? So now we had that push. Then we had this situation here. Let's talk about this situation here real quick, okay? So this, you can see, I got to make this chart bigger. I'm sorry. Hold on. I've been talking and talking and talking, and I forget. Hold on a second, you guys. I'll make the chart bigger. 1 second. Okay. You weren't missing much anyway. All right. So there we go. Okay. And chances are you're being manipulated by news, Armin says. Yeah. Yeah, you should. Okay, right. I'm just reading some of the comments. Right. Efficient markets is such a key thing. So basically, look, that primarily says too that we can't forecast where these things are going. I saw some crap about Bitcoin's going to be at 150,000 in a couple of years because of the halving, right? There's a lot of talk of that nonsense. Look, while that's a possibility, yes, people are talking about it like it's an absolute certainty. Oh, it'll be at 150,000. No, don't worry about it. Just buy, just invest, right? This is the kind of thing that they're implying. This is a bad idea because what if interest rates are at 12%, right? Now that's unlikely, but what if they are, right? If they are, Bitcoin is not going to be at 150,000. I don't care if you have it 10 times. These things need speculative capital to drive a sustainable rally, right? By not making that connection, and you believe these frauds that come out and make these ridiculous claims, you set yourself up for losing a lot of money. This is what I'm trying to help you with. All right. I don't want you to be in that situation. I want you to have better judgment. So back to context, right? So we have this situation right here. This right here threw off my scanner and stopped out a lot of trades, right? If you look at the channel, there were like more than 15 trades that showed a stop, or that were stopped out for a loss. I'm going to talk about that in a moment because it's not exactly a good representation, right? But I'm going to explain that. First, let me talk about this. So we have this situation here in Bitcoin, and here's the thing. As far as expectations and risk, look at this. The current candle has rejected this resistance, the 27.5 resistance. You see that? If this candle had closed, or if it was on its high and was planning to close strong, then I'd be like, okay, you know what? We can shape our expectations now to believe that momentum is probably going to be more on the bullish side. But the fact that we have a pin bar and it's not closed yet, right? The next candle, if the next candle, right, opens up and goes like that and takes out the low, that is not bullish momentum. So we don't have a new trend here. Anyone that calls this a bullish trend is ignorant and mindless. And I say that because you have to look at trend in terms of levels and structure. This right here is a resistance. It hasn't taken out this resistance. So as long as that resistance is still intact, that's not a new trend. Maybe it eventually will turn into one, but right now it's too early to call it that. If anything, right now, this is a lower high. If this establishes itself like this, if this is a lower high, then that increases the chances of retesting this level again. So that right there is context. Now, that's not a forecast. I don't know if Bitcoin will retest this level, but it's opening up the possibility if we get this type of formation. Okay, so that's one side of the argument. And that's the side that the structure supports, because we refuse to take out any real resistances. You can say, well, we took out this one. Okay, but that wasn't really like a major one. Okay, it was a minor one. We have one that's still intact up here, and I'd need to see that get taken out. Now, so we have that situation, right? Now, what if the next candle opens up and kind of gives us an inside bar, right? Now, this is another expectation. What if we get something like that? Okay, now if it gives us an inside bar, whether it's green or red, as long as it's not taking out any kind of lows here, right? Like if it's not taking out, you can even draw, this is a situation where you can even draw like a proportion or like fibs and say, if it holds the 50% line, it's probably gathering bullish momentum, all right? So in that case, what's going to happen is you're going to want to look for longs and see if you can find another long setup for a continuation higher. This is typically what a continuation pattern looks like, right? And what should happen in that scenario is the next candle should look like that. It should look something like that if this was going to be sustainable, all right? So that's scenario number 2. Does that make sense? So we don't know which scenario. I know everyone wants to know which one. They want the answer. They want the golden key, right? But there is no way to know. We have a bunch of interest rate decisions coming out this week that can have an effect here. But all I know is this level got rejected, and that's not a sign of positive momentum. I mean, look at these other candle closes, right? When they close strong like this, right, that's a sign that momentum is positive, and it continues, and it continues. And then we get this tiny little pullback here, right, which I described something like this. I said, if this thing doesn't give it back right away, and that's what this line represents here, right? That wasn't like I was forecasting that. You're looking for the give back, okay? The quick give back. This is a quick give back, right? A swift reversal. It goes right back. If we don't get that quick give back, you may get a further squeeze. That's what we got, okay? There was no give back here. And that triggered a bunch of shorts, which got squeezed because the give back never followed through. Because we have this conflict, it's best to let the market figure itself out. So as far as expectations, at this point, this is still bearish. Okay, does that make sense? This is still bearish. It's not bullish yet on this time frame, because it's a lower high potentially. So if you are using something like the trade scanner, right, and it calls shorts again, which it might do, okay, it's something you can consider because you're now coming off of a resistance level. So maybe there's a better chance it follows through this time. But like I said, the next you should see follow through relatively quickly. All right, here, let me draw this. This thing's just giving me a hard time. Hold on. You should see follow through relatively quickly, right? You should see this like quickly within a candle or so. Now let me do this here. Let me show you this on a 4-hour chart. You guys following me so far? Or am I confusing people? Let's go to a 4-hour chart, okay? This is a great example of a swift rejection, right? That's what it looks like. So when you get long, this is not what you should see, okay? When you get long, you should see something like this, right? It starts to go and it starts to go. Great, not this. So this right here, again, can lead to start breaking support, like start pushing these areas right here. And if it does something like that, the momentum is still bearish. Okay, does that make sense? And that opens the door for the 25K retest. So short signals are still, relevant. All right, so what about risks in this game then? What about risks? Risks are going to be a function of your strategy. So are you a day trader? Are you a swing trader? Or are you an investor? Okay, so we're going to leave the investor part out because that you're always at risk. Okay, but the swing trade and day trade, that's where you have to decide. So if there's a conflict, right, meaning this positive momentum may continue, then you should avoid shorts. Like if the next candle gives you an inside bar and the candle after that starts to take out that high, stop with the shorts. Just stop. And then let the market let the market figure itself out. Eventually what will happen is if the momentum's bullish, the trade scanner will start calling longs and you can be more confident with those longs. Chances are, price will be up here at that time, right? Because it'll be breaking out. But I'm not very, optimistic about that. All right. But it can happen, right? We have resistance here. That resistance can be tested. We have resistance here. That can be tested. Does that make sense? So again, my goal here is to just lay out some possibilities. This is, if you get short, these are your risks. Okay. That's what these are. You're risking it breaking this level, and you want to obviously be out before that. And you want to use the structures on a smaller time frame, perhaps, to get you out earlier if you get short. If you get long, these levels should get taken out. And if they don't, that's a warning sign. Now, on the long side, again, I'm not a big proponent of going long, especially after looking at something like this. But if the trade scanner, if the momentum changes and it starts delivering long signals, where is your risk? Now, keep in mind, the trade scanner gives stop loss orders and take profits. It does that. So you have all your reference points. But just in terms of context, where is your risk? Well, if you get long, obviously, and you see these candles here get taken out, this thing is not going higher. Okay, so 25K, testing these lows is basically what you're looking at. And let me point this out too. Let me point something else out, because I know we have a lot of bulls come out and they all start saying how, this thing's going to the moon and blah, blah, blah. But then we have this, and I bring this up all the time, right? The bond market, you guys should be familiar with this. This is nothing but bearish, right? Lower high, okay? Lower high, okay? Lower high. Nothing but lower highs. We haven't tested this low yet. We're flirting with it, sort of, but we don't take it out, right? Thing is, if we do, that rate's obviously going to go higher, and higher rates are bad for everything. Have you seen the stock market? Let's take a quick look at the NASDAQ, right? Oh, the NASDAQ is magical, right? NVIDIA and AI and all this other nonsense that you consume. This does not exactly look healthy to me. I've been bearish or generally trying to avoid these highs since June, okay? This whole rally, I was pretty much warning against. So not good judgment on my part, but what am I going to do? On a day trader time frame, that's not going to affect you as much. But as a swing trader, it can, be more of an effect. My point is this. This is bearish. This is a lower high. I'm not saying that this trend is changing, but this may be a consolidation now, okay? It's clearly we don't have a higher high, right? So perhaps test of low is coming soon because we have rising rates. Have you seen the S&P? take a look at it. Let's take a look. We had a couple of short trades go off, right, on the trade scanner, which closed in profit. It was nice to see some green, and again, that has something to do with this S&P. If they start testing these lows over here, that's gonna be an interesting test, right? Now, theoretically, this is generally a bullish trend. So if you're going to be looking for longs, that would be the place to be looking for longs. But in light of the bond market, there's a good chance that this breaks if that bond market continues the way it's going. If the bond market stays inside of its range, then perhaps this stays inside of its range as well. Maybe we get a failed low. Does that make sense? All right, you guys. So let me just go back here. Let me look at some of these chats. Before I want to address the trade scanner. Okay, let me just go back here. Hold on, you guys. All right. Any questions from students? Let me see here. Students only. Let's go back. Let me see. All right. Just going back, looking at the chat. Hey, Malad, good to see you. All right, I'm glad you're still there. Thought maybe you forgot about me. All right. Hey, Raman. Okay, I'm just looking at the chat. Okay, no problem, Alex. The beginner basics won't be enough. No, that's true. Okay, just going back over here. Okay. Chances are you're being manipulated by, right. Well, news, right. Comment by Armin there. That's, again, people like to believe that news is informative. It's only entertainment. You have to treat it that way. I'm telling you this from experience. I've been doing this a long time. One of the first hard lessons I learned was that news is complete nonsense when it comes to trying to make actionable trade decisions. If you want to sound informed and you're just curious about what's going on in the world, okay, cool, news, but not for trade decisions. You have to understand what you're up against, what you're competing against when it comes against that, when it comes up to that. So Bill says 4-hour closes above 26,270, still potentially short-term bullish. As we've seen a change of behavior, market structure. Right. So, well, again, so I want to see the next candle, okay? Because this candle, we can't, it's really bad to judge an open candle because this candle may still close strong, right? So, and this is the daily chart, but it may close strong. Maybe the next candle gives me an inside bar and refuses to pull back, okay? Which would be bullish signs. So you always have to weigh, am I looking at bullish signs or bearish signs? But you have to look at that in light of the bigger picture. That's context. Right? Like for example, like I said before, shorting into a support is just a bad idea. It sounds like a bad idea, right? As I explained it, I'm like, oh, that makes sense. But when the trade scanner calls short trades, I see people taking those shorts. And it's like, man, be careful with that. I would like to filter those out. Trust me, I'm working on that. But those are high risk trades. And someone that's new, that's a beginner and has no sense of context, and they take those trades blindly, they're going to have a hard time. Right. So that's why it really helps to be informed in the right way. Okay. Stop loss would be 4-hour or daily. Well, yeah. So it's going to depend on the type of trade you take. The stop loss that the trade scanner uses is based on the 4-hour chart. Right. That's where we get that information from. Okay. So let me so let me just do this. Raman. Okay. Can you check dollar index and gold? Okay. Raman is a member. So yeah, Raman. Let's take a look. So dollar index. So this is the dollar index, right? I mean, look at this. This is a reflection of the bond market, by the way. So it's strong, right? Let's take a look at the weekly chart. Look at the dollar. This looks like an altcoin, does it not? Look at that move in the dollar. That came out of nowhere. No one was expecting that. By the way, have you seen oil? This reminds me of oil. USD. I have to just mention this real quick. Look at this. What is going on in oil? Okay, $91. This thing's out of control. I mean, since when? We're testing a resistance, but still, look at that. Look at nice continuation pattern over here. I wouldn't be buying oil now, but certainly I'd stay out of this thing's way. All right. I don't know all the details that are going on in oil. Like I said, I don't follow this market very closely, and this is not on the trade scanner either. I don't have oil in there, but man, interesting, right? Okay, so back to the dollar. So the dollar, when the dollar is rallying that way, right? Something like oil should be feeling the pressure, and it's not. So it can only imagine, because oil is still priced in dollars. Anyway, the dollar is back at a resistance, but I mean, look, week after week after week after week, this thing's just been going higher and higher and higher. Again, a reflection of rising rates. not good for anything else. And we haven't really seen much pain in the other markets yet based on this. If this breaks out, look out. Okay, so I'd still be looking for shorts in the euro and all that. Like, we maybe get like a minor pullback here, but until this trend is broken, I'd still be bearish on things like the euro and the pound and anything that trades against the dollar. By the way, we do have a Forex trade scanner set up now. It only scans the major pairs, though. I don't have all those ridiculous, cross pairs and exotics and all that stuff, because they're a waste of time, most of them anyway. All right, but if you're interested in Forex, I do have that scanner running now. It's called a dollar Canadian short. I think it called a euro short once a little while back. But I'm expecting to see more trades come across that channel as well. All right, gold. So gold, again, another effect from the dollar. XAU USD. Okay, gold. Gold. Now, interestingly enough, gold is rising in the face of a strong dollar. This should be going the opposite way. So here's the thing. So gold is tricky. I wouldn't touch gold right now. Let's go to a weekly chart on gold. You have this consolidation. Clearly, it's a consolidation, and it's coming off of a higher low. Look at this, right? So nice double bottom situation going back a few weeks. See that? Pin bar previous week, buy signal, right, on gold. But be careful with gold, because it's not in an environment that really supports it. I mean, if dollar continues higher, this thing is going to be limited. Now, I believe gold is in a seasonal strong time right now. Is that correct? I'm not sure of the seasonality on gold, but keep in mind, though, with a rising dollar, this rally may be limited. Okay, but general structure here is on gold. We would need rates to be coming off. We would need the dollar to get weak for this thing to get out of hand, to do something crazy. Does that make sense? But general structure on gold is bullish. And if you're looking for smaller time frame trades, perhaps day trades, I'd be thinking on the long side. If you're looking for swing trades, wait for better levels, okay? Like, you have a level right here. That turnaround on gold, that was a level that you could have projected in advance, at least, to look for longs. So something like this, if you get any pullback to that level, that might be a play. That may be something to do long on gold, swing trade. Again, my scanners don't scan gold either. So that's not one of the ones we look at, that the scanner looks at. Doesn't mean it's a bad thing. It just, I don't have it programmed in there, okay? But anyway, okay, makes the production and amount of oil. Right, so that obviously, yeah, so there's, okay, thanks, Han, for sharing that. So obviously there's stuff going on. There's always geopolitical stuff going on with oil. That's why oil is tricky. I find oil to be very tricky. But that's, that's gold. Here, that's the dollar. All right, so guys, I just wanted to cover those things. Good question, Raman, and thank you for asking. So let me leave you guys with this. Well, first of all, I have to address one thing before I wrap this thing up. It's an important thing, so I'm glad you stuck around. So the trade scanner called like over 15 trades, and they all stopped out. So let me address that real quick, because if you can go to the Discord channel, right, the community right now, as a free member, you can see the channel. We set up a results channel, and you can see all the trades that go off on the trade scanner. Once they're closed, a report goes inside that channel, and you can see the result, right? You could see where it was open. You could see the stop loss. You could see all the information, and it tells you the result, which is great work by Steen, by the way. So this gives you a nice gauge of how it works. By the way, we also have Trade of the Week is now working. So one trade each week will show up in the Trade of the Week channel. As a free member, you have access to that, and it gives you the stop loss and take profit. Again, you can thank Steen for that, okay? So check that out as well, because you can see a free trade. Basically, it's like having a free trial. You could check that out, and you could see how the trade works. I highly recommend that you trade that on paper, all right? Now, it'll call a stock, it'll call a Forex pair, and it'll call a coin, right? Those are the three markets, and it's not limited to any market anymore. It'll just call one of those each week. So check that out, okay? Now, so let me address the trade scanner, and let me pull something up like Litecoin, okay? Because Litecoin was one of the coins. So Litecoin, a couple of shorts were called on this thing, right? And then look, it got hammered. Let's go to the 4-hour chart, because that's basically like the time frame. So every time there was some kind of momentum turnaround here, like here, I think that one was a winner. But then you had like some action in here, okay? And then you had like this action here. And these were all shorts that were called. And all it took was like a move like this, and they all get stopped out. Now, understand something about the trade scanner, which we're going to filter this. The trade scanner calls doubles, okay? What a double is it calls a signal, And then after maybe 4 or 5 hours, it calls the same signal again with a varied entry price, right? Because what's happening is the signal goes off a second time or third time, and the robot sees that as a separate trade. It's basically all the same trade. Also, all these altcoins, they're all being called shorts, right? Because they all follow Bitcoin. So the thing is, it's all the same trade. In reality, if I was calling these trades, I wouldn't be calling double trades. I wouldn't call a trade and in 4 or 5 hours call the same trade at a slightly higher or lower price. I wouldn't do that, right? So that's not practical. So we're going to filter those out. So after all the filtering, there's probably maybe about 5 or 6 losing trades, not 15 or 16. So understand that. And Steen, I think we should probably remove those. I was thinking about it because they're not accurate or practical. Because yes, they're losing trades, but they don't reflect reality because, for one, they shouldn't have been called. They're doubles, right? So in reality, we wouldn't call doubles. So but I wanted people to see that, and so they understand what's going on. Now, some people say, well, what if I only trade Litecoin and I missed the first one and the second one comes out? Well, then you missed it. We wait for the next time it comes out because on the other side of that, let's say all these trades were on the right side. We'd have 15 or 16 winning trades, and everyone would be like, "Oh, this thing is a gold machine," right? And everyone would go crazy. Meanwhile, it's not an accurate view because we wouldn't be calling those doubles, right? So, just something to point out. And so we've made adjustments to solve that. Or Steen's going to be working on those updates so that it won't do that anymore. Okay, and you'll get better trades. We've made similar adjustments to the stock channel. You guys who are in the server, you remember the stock channel used to just generate walls of signals, right? It would generate like 15 or 20 stocks, and you'd be like, what do I do with these? Well, we've reduced that to like 1 or 2, right? We've reduced that dramatically, and they have the stop loss and the take profit. So it just required some filtering, and the same thing will be happening with these other markets here. Okay, so I just want to mention that. Again, if you're interested in the trade scanner, check out the trade of the week. It's free. Paper traded. It's a channel in the server. It says trade of the week when you join. It's at the top of the server. Check that out and you'll see what I'm talking about. It gives you the entry, the stop loss, and take profit, and you can figure it out from there. Paper trade. All right. Okay, is it me that the historical following up with things? First stocks go, then okay, no, it's not you. What you're talking about there, Han, is actually a phenomenon. It's called the Pring-Turner business cycle. Okay, so there is a relationship, and it all begins with bonds, right? So the bonds actually make the first move, then the stocks generally make a move, and this could be 6 months apart. Okay, 6 months apart. First the bonds, then the stocks, and then things like gold, oil, silver. Those are usually third, and it always goes in that order. That's actually, look up Pring-Turner business cycle, and Google that, and you'll see what I'm talking about. That's a real thing. Okay. Also, Steen says the doubles should be filtered out by now. So Steen's working on it as we speak, right? So it's great. I mean, he's been doing some great work, and a lot of our members, they have input. They share input with him, and he makes adjustments based on their input. It's nice to have that kind of input. So anyway, all right. By the way, BTC 200-week EMA and 22-week exponential have been very useful. Okay. 22-week EHMA. What is that? Oh, is that the exponential hull? Exponential hull. Okay, I get it. That's interesting. Thank you for sharing that, Bill. Okay. All right, you guys. So that's pretty much it. If you have any questions for me, you can find me in the Discord channel. That's the best way to communicate with me. Now, keep in mind, I will not send you messages. All right. I will not send you a private message in the Discord server. So if you get a private message from me, it's a fake. Okay, this happens sometimes. So make sure that you block that person and report them. That's not me. I do not send you messages, but you can send me one and I'll respond. So if you have any questions or you'd like to know more about the trade scanner, we have some nice updates coming. We have a lot of changes coming. So now is a good time to get acquainted with it. And you can go in the Discord server and you can see what's going on in there. Okay. Plus, we have a bunch of other things going on there too, as far as free information. We got, we have Alex has been helping out with the moderation and stuff, and there's a lot of good information. I'm only looking to improve it. So please join and become part of the community. All right. So I'll leave you with that. Don't send me messages anywhere else because it's harder for me to respond to them. I check the server regularly. All right. So anyway, all right, leave you with that. Anyway, guys, thank you so much for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thanks for watching.